Morning traders, welcome to the Traders Lab. I'm your host Tom B. Thanks for visiting the lab today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles, the chassis, to overlay structured trades on, and these are available to everyone in the Bookmap Discord Trader Lab community. Trader Lab's a group of like-minded traders that come together to leverage their collective experience. It doesn't matter how long you've been trading, what you do, how you do it. What does matter is if you're looking to create a sustainability in this business, it's very important to separate what we imagine the business to be and what it actually is. And as developing traders, we all typically go through a process, but there's a catch. The catch, in my opinion, is random winners in a random environment. Now you're going to say, well, everybody has winners. Well, that is actually a problem, maybe. And why is it a problem? Because if we look at a gaming process or gaming theory, and this is really based on how casinos operate, the house sits on one side of the table. They only play games with edge. Edge means that over a random distribution of outcomes, they extract dollars from the gamblers. Well, the gamblers on the other side do not have the edge, but they have random winners. So our business is not about I was right, I was wrong, which is your self judgment, if you will, and the lunatic under the hood, I like to call it. That's the wrong way to look at this, in my opinion. I'm always going to say my opinion. You can have a different one. It's okay with me. I'm not here to challenge your beliefs. I'm here to help you understand that maybe you have a process that has random winners that does not have an edge. What that will mean is even though you have the winners, you still go out of business. Can you tell the difference, and do you know why there is a difference? And if you keep getting random winners and you're trying to make it better, very logical, might it be that the process is defective, not your effort, and not the random winners? What it means is you don't have a sustainable process or a statistical edge. So what we need to do in trading, at least what I had to do, was change my whole belief about what trading is. It wasn't about the magic indicator, the holy grail, the only one thing you need. Wouldn't it be nice? I found for me, and again, 47 years of doing this, and I think the 47 years, based on my learning curve and how difficult it was when I started in 1980, that I can add some ideas that may help you in your process or your journey. Trading and developing and learning to trade is a process. It's a journey of self-discovery and process. And most of us have a fantasy of what trading is, and I'm going to suggest maybe it's something different. Of course, it's up to you, but that's why the Trader Lab exists, to help you separate fantasy from reality and potentially build out a sustainable practice. And if that's your goal, Trader Lab's available to all of you, and there is no cost for it. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. I take stops, you take stops. It's overhead and cost of production. In your mind, you're going to say, I was right, I was wrong. Let me tell you what's right and what's wrong. Very simple. That I follow my plan that has a statistical edge. That's right, and that's wrong. What was the outcome of the trade? Random. Not right, not wrong. Different. What are losses if it has an edge? Overhead and cost of production. How do the casinos operate in a random environment? They're sampling the environment. That's what we do as traders. We sample the environment, because if you understand the business you're actually in, when your trade shows up, and this is what you would develop if you do the work in Trader Lab, you know then, and you wait for it, you know that you have a statistical edge, but you cannot know the outcome. So what's right, what's wrong? I know what our nature is. I got it wrong. No, you didn't. How about this? You get it right when you sample. How do the casinos extract their edge? Because they sample, and they only control what they do up until the point they deal the cards. We only can control up to the point where we put the trade on. After that, what is it? Random. Keep that in mind. Grab a pen and paper. Now, I'm going to quickly walk you through some elements that are important. Now, if you guys follow the stream, you should review yesterday's stream and actually watch these streams as they come every day. And the reason is you can see how this develops, how we take every day and look forward to the possibilities with a plan. And then as the market behavior changes, we adjust to it. We're not rigid. Well, how can you be rigid as a day trader? As a day trader, you're trading rotations. That's what day trading is, not predicting. Remember, this is not a business of being right. I knew it was going to do this. You don't know. So here's the deal. You need to understand that you don't know. It frees you from the psychological need to predict and be right. If you accept you don't know, now you're accepting randomness, which is the actual business. Just trying to make a small point. Now let me take you to something I'm going to try without blowing everything up. I posted this morning in Trader Lab around 7:21 a.m. Central Time before the report came out and everything else. And this is based on what yesterday's plan was. And I'm going to take you into that in just a moment. Now, I have to always say, there is not a right or wrong or I knew it. Doesn't exist. I take stops, you take stops. Overhead and cost of production. We have to get over it. I get it totally wrong. Remember, right, wrong? I'm doing the right thing. If my plan is not in alignment, I have to change. How do I know where to change, when to change, and also how do I know when not to trade? These are all defined in a trade plan. And then it's basically sit back, get in your Barca lounger and wait for your trade to show up. It's like waiting for a bus. So here's what's today's scenario. Scenario today, market is still long, and you'll see, and I'll show you that in a higher time frame. And yesterday's plan was for continuing long liquidation, and it's still in play. The ETH inventory is currently short, and this is pre-ETH report at 7:30. So we're anticipating potentially a gap, initial continuation selling, and then potential to come across the range and squeeze the early RTH sellers, and eventually maybe a gap fill is possible depending where we are on the RTH open. Since yesterday was balanced, that means two-sided, we can also potentially come into yesterday's range to squeeze late week sellers and test the naked volume point of control above, which I'll show you. None of these are recommendations. They are scenarios and plan based on potential conditions, always fluid and subject to change. Remember, your job is to wait for your vetted trades that are in alignment with your plan and conditional context. Be patient. Manage FOMO. You have all day. Okay? That's the plan. Now what happens after that? Let's put our helmet on. Now I'm going to show you the higher time frame scenario. All this is done before the RTH open. Now yesterday, remember what the deal, as we say, was yesterday. This area here is a key support level. And you could see how we tested it when we came down. This is auction market theory. There's loads of webinars that are posted in Trader Lab on this. We won't spend time with it today, but basically this is support. Well, on this day, we blew under the support, and it was, we're out of here, the Acapulco cliff dive. But what we did is we found excess, and we came back. And notice where we closed. This is very important. We came back, we closed back in. Now, the next higher volume, in the next higher time frame, this is RTH, and this is like intermediate. This is taking all the volume from this outside edge to the all-time high. So in multiple time frames, volume is a fair price. These yellow lines are a fair price. You see how it is? That's a fair price, intermediate. That's a fair price, RTH. Too low, too low. See how it works? Now if I come under, too high. I come back above, too low. So if I out here, I come back in and we have shorts. Watch the market mechanics. Just consider what you're going to see. This is where we went down the Acapulco cliff dive and everybody was running for the exit, right? So now what we look for is if we come across the range, now we have built-in buyers, buy stops. And what about up here? Well, on this day, if I find too low here, support, retail price, where's my next intermediate time frame target? It's here. If I can't get above the intermediate time frame, and on this day, which was shorts only, the ETH high was here. I'm not paying that. Remember, shopping. What happens? Shorts in here, continuation sellers here, and we take the stops out. Now, this is all important behavior. Let's look at the other behavior. What do I have in here? If I got shorts, I got buy stops. If I get shorts, I get buy stops. If I open and go lower, I have more sellers. What does it mean? Buy stops. What happens now if I squeeze? Remember, the market's rotational, always in different time frames. So I got shorts here, I got shorts here, and I got longs in here. Remember, sell stops are built in here, buy stops are built in here. Is this making sense so far? Yeah, Tapish, thank you. Is this making sense? How are we doing in YouTube this morning? Oxygen masks on. Okay, so where's my stop? Sellers will be in here because the market's long. If the market gets long and I'm squeezing, watch how this works. I'm squeezing the shorts in this down move, and this is resistance and further up, and we could come there, or shorts were here in the Trader Lab, and yesterday shorts primarily in here. Okay, so what do we know? Let's come back to what we know. So this is yesterday. What do we know? Longs in here, shorts in here. So that's why what can happen? We open lower, we get early sellers, continuation sellers, we can come across the range and squeeze. That's in that little thing I showed you that I posted this morning. If I can't get back up and in the range, then I can go south of the border. What's a key level? 6,700. If I get under 6,700, potentially, not a recommendation, I've got this outside edge and I've got these longs who are under the bus, maybe we'll take them out. That's my plan for today, and I'm sticking to it. Now, that is not predictive. All it is maybe. Maybe it'll do this, maybe it'll do that, maybe I don't know. What do you know? See? So we know we don't know. Write that down. We know we don't know. Now, before I move on and show you the actual structured trades, this is what they look like in the Trader Lab. There's 60 PDFs of these, and they're available as well as the library of webinars, and there's no cost. Now, right away, first thing I have to say, there is no plug and play. So, and I know that's what we want. I know all the influencers, you go out on YouTube world and wherever, and everybody has the special sauce, the holy grail, and the only one thing you need. You've been doing that for a while. How's that working out for you? Maybe do something different, unless of course it works. And don't forget, random winners. You could have a random buy sell generator. You're going to have winners. Every indicator in your software toolbox works randomly. But why do we have 200 indicators in our software toolbox? Ever ask yourself why? Because they all have random winners, and that none of them, in my opinion, have edge. So what we do is we try to cobble these multiple inputs together to try to create edge. But we don't have edge. All we have is randomness. Again, my opinion, my experience. And I built trading systems to try to overcome that with optimization. And I'm going to use the term not so much. So now, let's come back. Maybe. Let's go to Bookmap. Now, we understand the condition of the market, right? We have geopolitical events. This is not a walk in the park. This is high volatility, high risk, and you need to know before the market opens your plan, what you will do, where you will do it. And that's what structured trades are. That's what those 60 PDFs are. And this is what trading actually is. Anticipating locations, alignment, and the business is really a business of alignment. You're thinking again, was I right or wrong? No. Here's what's right or wrong. Right is knowing what you will do before it shows up. When it does, you put the trade on, you put your risk on, and you take a stop, or whatever happens, happens. And you're going to go, I don't want to take stops. Yeah, you got to take stops. So you have to change your relationship with loss. Loss is not right, wrong. And we all feel it emotionally. By the way, you're still going to think it because you're trained in that process mentally. Your whole life has been getting approval, you're right or wrong, in school, your parents, whatever it is, So it's right, wrong, predicting, needing to be right, and that's not the business. So we have to change our relationship to randomness. This is what will take you out of the business, assuming you actually do the work, because you have to change your beliefs about what the business is. So remember what the plan is. This is the RTH Open. Now, let's look at a couple things. Statistically, I'm going to give you the context. Now, there's a couple things you got to be aware of. We're gapping. So we're out of range. That means under yesterday's low, wherever that went. It's up here someplace. And we're out of value. So this is the gap, okay? RTH Open. So out of range, out of value. Oh my goodness. Now there's a little more. This is the ETH, overnight volume point of control. Overnight volume point of control is that high volume I was showing you at the top of the stream when I go over. So it's all the same. High volume is shopping. You are a shopper. Do you know that? You're in the shopping business. Think what you do when you go to the store. If a price is too high, you're not going to pay it, right? If the price goes on sale, you're going to throw 10 in the cart, right? If the price is fair or retail, you're just willing to buy it, and buyers and sellers do business. Well, in our business, we are trying to figure out what's too high, what's too low, what's fair. And also, when something is fair, what happens if the perception of that fair price changes? It's like you going to the store and you paid $1 for a can of tuna. And now the price of tuna has gone up. You can't buy tuna at $1 anymore. Tuna's now $1.50 and buyers and sellers are interacting. What does that tell you? You can't buy tuna at the moment for $1, so the price then is too low. I can come back to that price. Is it still too low? And if it is, I'm going to leave it. If it's not, then the price that was higher might now be too high. And you're going, well, what am I going to do? How am I supposed to figure this out? Come to Trader Lab. Maybe then you'll be able to figure it out. And again, past performance is not indicative of future results. This is the business of trading. We got to get over it. You really do. So, yesterday's low, gap, value area low. 70% of the volume yesterday took place up here. Let me show you one other piece, and I'll get right to it. This is the high volume or retail price from yesterday. So this is where the agreement was on price. Well, what happens if this price is too high? I'm not paying that. Well, we don't know that. But when I open here, and I know the last auction, the ETH, this is the fair price, is it possible that this price here is now the new fair price, which I don't know, and this price is too high? Oh, there's another piece you're saying. Really? What is that piece? Let's look. Let me try to find it here. Hold on a second. I lost it, I think. ETH high. I lost the ETH high. Is that at 69.75? Really? Is that correct, guys? Can you confirm that? Yes? No? Can I get a response, please? 69. It's 69.75 ETH high. 69.50. All right, be picky. All right, 69.75. What does that tell us? Look where we are. The ETH high is way out there, and now we're gapping. For this astute group of traders, what might that tell you? Maybe it's too high. So let's go a little further. I know the ETH is short. Let's remember that. What happens? Often, what happens is, in this situation, you get the gap, and we have a geopolitical event, which you guys are all aware of, not good, and the sellers that got squeezed out yesterday in the rotations, right? Or anyone who's not short, who flattened out might re-engage this morning. We gap lower, they sell in the hole. Now the ETH is short and the early sellers are short. This sets up a scenario of, number one, continuation selling. Oh, I got to get short, I got to get short. That is the dominant side, in my opinion, my time frame, not yours, me. What does that say? Trend is down. What do I want to do? I want to use counter rotations for shorts. In other words, squeezes. I'm not interested in getting long. You can get long. Me, not so much. I'm just one of those guys who says I want to trade with the advancing side, the strong side, which is the sellers. And when I get squeezes, I want to use the squeeze or the counter rotations for continuation shorts until it changes. So, how are we going to know when it changes, you're going to ask me? I'm going to say is afterwards, right? So my plan is going to keep me with the dominant side, and when I get counter rotations, I'm going to get taken out based on my trade management process. That's okay for me. I anticipate it. Why? That's how the market works. This stream's about market mechanics. How does the market work? Why does it do what it does? How at times you can get in alignment with it with structured trades that you must vet. That means your groove, your time frame. That's what it means. Does that make sense? Are you guys tracking? Give me a yes, give me a no, give me let you know. Okay, now, without further ado, now we will go into real time. When I say real time, structured trades is what I'm talking about. What I'd like to do, and what is very educational, it's not worth it for you to see me show off. Not worth your time, not the point. You need to understand market mechanics to be able to trade. So my goal here is to show you something that most other traders either don't know, don't do, and cannot transfer information that's usable. And that's my objective. That's why I created Trader Lab. It's so you can save time and not put yourself potentially out of business by trying to fix a potentially. And I'm also going to say potential because I don't know what you're doing. I know what I did. And unfortunately, I spent too many years trying to solve with defective processes that I was always trying to fix. What kept me doing it was the winners. And you're going to go, well, isn't that what you want? Not random winners without edge, random winners with edge. Isn't that a different thing? So let's go. RTH open. Now, I always say to developing traders, do not trade the open. Too fast, too furious. You need unconscious competence to react. So if you haven't, and it's going to take you years of screen time, unless the market's really slow, to be able to operate here, because there's high volume, high volatility, and so the risk is outsized. You really got to know your stuff. But this will teach you speed reading. What I am doing is reading a language, not indicator based, but auction based, volume based. And the more I understand and can read a foreign language, think of this, if you want to learn this, it's very similar to learning a language, okay? And what I'm doing with order flow in the auction, it's all speaking, all right? Now, of course, interpreting is a little bit of a challenge because it's random, and we will take stops. Now, let's start. RTH open. First thing I see is a sweep. The sweep suggests the potential for a counter rotation. Now, there's another piece here. This is extremely aggressive. Now, remember my plan, just mine. Oh, I got to give you statistics. One last thing. We're opening lower outside of range. Write these down. You have to vet them for yourself. Then we'll get going. 98% probability of taking out the first hour's high or low. ETH high or low, 91%. Now, right there, where was the ETH high? You see how the pieces fit together? The ETH high at 67.69-ish. Don't hold me to it. Ish. Do you think we're going to go take out the ETH high before taking out the ETH low? There's the first question. Okay? So I know I've got 91% probability right there to take out the ETH low. Where is the ETH low? It's there. What does that do for you? Does that give you something to think about? Now, there's another element, which is why I came in my plan. I said we also, if we get the ETH short and we get the early sellers, we can potentially come across the range, squeeze out the shorts. Remember how the market works, goes up to go down and goes down to go up. If it goes up, what do we have here? Yesterday's low. One more statistic to keep you from falling asleep: 68% probability to return to and fill the gap. Not a recommendation. Why then? Can you see how my plan comes together? I'm not saying it's ever going to fill the gap. It's not my job. My job is to anticipate what might happen and anticipate it and try to define change. That's my job. Other than that, that's it. I don't know anything else. So since I know I don't know, and write this down, guys, the business that you're attempting to be in is one of alignment, not prediction. But you need to understand scenarios, and when you walk into the market, all what I'm discussing with you right now is all before the first trade. Does that make sense? And if you're not doing this, then you're entertaining yourself and you're playing a video game. That's okay. Just understand, accept responsibility, and enjoy yourself. I figure you're better off getting your buddies, go to a casino, get the cocktails and the ticket to the buffet because it's entertainment. It's a great time, right? But if you want to be in a business, maybe it's better to sit on the house side of the table than it is to sit with the gamblers. Up to you. But you can always get the cocktails and the ticket to the buffet. This suggests downside rotation. Now let's look at language. Now this is a very high risk place to trade. This is the retail price from the ETH. So I can anticipate two-sided rotation here. And again, no clue. High probability of going here, and 6,700, this right here is important. I'm going to just remember it's there. So this is called, I made this stuff up. Now, a lot of what I share are things I developed, and all of this I developed very early on. I learned market profile from the guy who created it, Peter Stottlemyre, and I think it was 1980, I don't know, 85, 86, somewhere in there, So I started working with this stuff and my indicators together, because I was indicator and system based, all right? And I was not, and back then, I was a position trader. So day trading really wasn't, no. There was no electronic trading. And I'm trying to remember when Globex started. I think that was 1980, 81, maybe 82, where we had, and it was called, it's not that important what it was called, Project A, and it was only in the bonds, CBOT. So I was there for all this. And that was like when electronic trading started. So it was very early, and we didn't have domes, we didn't have volume, we had nothing, nada, zippo. So it was very, compared to today's technology, it was primitive. No computers, no PCs. Actually, I had, in 1982, my first computer was an Apple IIe, and I was doing analysis on there, building systems. So I'm just giving you a little bit of my background. Not important. Here's what's important. I've spent more time at this than you have, and I've wasted more time than you have. This is a variable high volume node. This is the first suggestion. Now, I can't trade this. Why can't I trade it? It's too fast. When I'm looking at this, my jaw hits the desk, and it's already moved away. So let me show you the trade. Now, microstructure. Let's go. And if you have questions, you're in YouTube, post them. I'll do my best. If I can't get to you because there's a delay, use the link in the bottom of YouTube. Visit Trader Lab. There's no cost for it. You won't be solicited, harassed, or otherwise abused. You just have to be serious about the business. So it's not romper room. I mean, there's a lot of great places you can go, and it's ridiculous. And you may enjoy that. I'm not saying, it's just something I don't relate to it. I actually get kind of annoyed. And the reason is because traders don't have unlimited capital and unlimited time, right? So if we have finite resources to invest in a business, and you end up wasting time, or Trader Groundhog Day, repeating the class, you're going to keep waking up in the same place using a defective process, trying to replicate what others do, but you can't. But you can learn how the market works. Then you kind of cut your piece out of it, and then you wait for your bus. This is a short in the Trader Lab. Now, when this happened, I'm in here 10 seconds. This one I didn't get. It was like boom, by the time I was conscious. So right here, too high. This is a supermarket, right? I'm not paying that. Leave. So when this happened here, this is resistance. Now this is the new retail price. Moves down, new retail price. Watch the behavior. So how does this work? If this is the new price, now this is happening in real time at the speed of light almost. It's only 10 seconds. If I rotate up, where was it too high? It was right here. I'm going to put a little line on here so you can kind of see. And all I'm doing is not complicated. We're all in a supermarket together and we're shopping. Trading is shopping. Too high. Now watch. Buy stops here. Who knew? Hindsight very clear. So what is this? Let's look right here. What is this green delta? Now the sweep says counter rotation. Okay. And it doesn't predict. It says maybe this is too high. Counter rotation. Maybe this is too high. Maybe this is now too high and I break away. Watch. If it's not and I cross, and this is called VPOC migration, it's a specific process. Too high. Don't know. Why wouldn't we take this out? How about this? Clueless, but not ignorant, but very clueless. Now I know there's too high when I break here. Now what I know is this was too low. I crossed above it. If I cross back below it, it might be too high. I can sell this. And my stop is going to go up here. And whatever happens, happens. Watch. Watch. Now what do we see here? What was too low? Break low. What is this now? This is too high. Watch. Microstructures. I'm taking you down in, what I'm doing is I'm operating in a multiple time frame as you think of it. But I always have to say I don't use time. I get it. We all use time. But there's no time here. What there is behavior. So for me, I've thrown the clock out the window in the intraday developing time frame. Because with order flow, I'm not waiting for some fixed artificial imposition on the participants to define behavior. I've thrown that away for me. I'm always going to say do what works for you. I have opinions, but it's only in relation to my experience. It has nothing to do with you. It has to do with if you have edge. It doesn't matter if you're using a magic 8-ball if it has a statistical edge. By the way, we had a magic 8-ball on the trade desk too. And I'll tell you, at times it did as good as anybody else. This is too high. I'm not paying that. Retail price. So too low. So right here is support. Oh, it's too low. But where was it too high, Tom? Come on back. Trend alert. So, too high, who knows? Support. This here is also support, break below it, so I have resistance. So this is my short. If I didn't get this, different animal. Where's resistance? Here, there, All these are shorts. Where's resistance? There, there, there. See it? Is everybody with me? And there's a little more, obviously a lot more, but I'm going to keep it as simple as possible. Here's the thing about trading. We tend to think complexity creates certainty. Isn't that right? Think about it. I want certainty. Why do we want certainty? I know you're going, wait a minute. That's obvious. No, it isn't. It absolutely isn't obvious. It's the last thing you're thinking about, but it's the first thing you need to understand. Why you make a decision. Primal wiring says avoid risk, avoid pain. So in order to avoid pain of loss, which is painful, we are wired to seek certainty, right? Well, we're in a business of 100% uncertainty and randomness. Isn't that a bit of a conflict? Isn't it? Doesn't that suggest to you that if the casinos can't operate with certainty and they're in a business of sampling and to extract edge, if they don't have certainty, do you think you can get certainty? So the emotional decisions you make without being conscious of the driver is what one of the main elements that take you out of the business. Your fear, your need for certainty, your look for self-esteem, approval, dopamine, and the rest of it. Do you understand those pieces? If you don't, come to Trader Lab. Because the biggest challenge, at least I believe, it was hard for me, was to learn what the real obstacles are to sustainability. And the biggest one, because I believe anyone who comes to Trader Lab can learn how to trade. The biggest obstacle is you. Not learning how to trade. You and what you do. Because what you do is, and what you want to do and what you actually do are going to be two separate things. What you do is going to be dictated by very strong reactions and emotional or chemical responses, things that are going on in your brain. Let's look at this. So anyway, this, only if you're very experienced, and of course, taking stops, right, part of the thrill. By the way, if you sell it here, you have the same opportunity in a random environment to take a stop there. Let's get over it. Remember this. Oh, I want to be certain. What is that? I want to avoid pain. What happens if you don't take the trade here, but you take it here because now you're certain? Has the potential of a random outcome and taking a stop changed in a 100% random environment when you're seeking certainty? What have you accomplished here? You haven't changed the outcome. What you have done is maybe double the risk. How does that work out, you think? Because you haven't changed the randomness, you've only increased your risk and limited your opportunity. Think about it. Anyway, I'm not paying that. Retail. Now, right here is trouble. Crossover, potentially this is too low. Variable high volume node. Remember, this is the shopping experience. And how does this work? Remember from the top of the stream in all time frames. What was too high? What was too high? So if I cross here, teeth chatter, I can always come across the range and take out the sellers. Remember how the market works. Market goes up to go down, goes down to go up, and, put your helmet on. Cross here, resistance is here. If I think that the market might go down, I can sell this, and now I have to get under here because this is too low. Too high, too low. So if I get short, this is resistance. Above here, this is support. If I can break under here and stay under here, I can go to here, which is my 90-ish% probability. If I come back across here, I can now come across and squeeze. It's one or the other, no clue. Let's look. Where's resistance? Let's come back. What do you see right there? Right, watch. There, right there, right there. Short, support, see it? Support, resistance. What's the trend? I'll take a wild guess, it's down. Are you guys tracking? So I can sell this, and there's more. How about when I come under here? What's this say? Let's look at our language. Now I come under here, over here. Should I sell it? No, because I cross above. Where's resistance? Here. I can sell it. I go down here. What happens when I cross above? I come back here. We're shopping together. You and me, we're in the store. I'm not paying that. Get out of here. All right. Support. Resistance. Watch. Microstructure. Now, notice it's not mechanical. This is resistance. See the behavior? Resistance, resistance, break low, going to zero. Break high. Now what? Resistance, micro, break high. Uh-oh, where's my next resistance? Up here. What happens here? Support, just watch. Now this shifts up. This is the warning Will Robinson moment, just like these are. What does it say? If this is too low and I break high, squeeze the area. But what happens if it's too high and I break low? I can sell it. Again, I'm saying these are opportunities for you to vet, not plug and play. Are you guys tracking? This can be an ad or whatever you want it to be. Where am I trying to go? And again, the market rotates. Remember the plan. Continuation selling, potential squeeze, and then using the counter rotations, unless things fundamentally change, for continuation shorts. My plan, not yours. Other traders in Trader Lab are going to take longs. That's their business, their plan, their edge. Not mine. I don't have an edge getting long. But I use the longs to reposition short. Is that logical? Now let's look at the order flow again. Now I'm using order flow, but let's look at what comes in the book. This is the limit order book, and this is called the heat map. What it's doing is, instead of me looking over at a dome or any of this, I'm looking, or this here, the limit order book. I don't have to put my brain there. I can't process too much stuff at the same time. This is a visual representation of the limit order book. I can see what's resting before the market gets here. It's really useful because what are these? Probably passive buyers, icebergs. So if I know I have buyers, I want to see how the sellers do in relation to the buyers, because there's a couple possibilities, of course, right? If I can get below the buyers, think Pac-Man. Let's go to simple things. This is not complicated. Trading is not complicated. You know what it is? Random. Let's change it. Oh, it's so complicated, it's so hard. I know that's what you rationalize, but let's change it. We got to change our beliefs. It's random. So it's random. All right. Okay. So now what? What does it mean? So this is a language. When I get my sellers, you see them? You see the icebergs here? 500, and this is the tip. Don't forget, iceberg, you don't see the full thing. You see the tip. So I see the buyers, and what are they doing? See the sell stops coming out? Sell stops are market orders. There's the delta. What about the passive side? The limit orders. They are absorbing the sell stops, okay? So I know they're here, stops are here. That's what I know. What else? Clueless. Watch. Now, come to the profile. Let's look at what this is all about. This is where most of the volume is. The volume point of control, which is the highest volume, and it moves around, is showing us shopping in real time. What's the high volume or retail price? Well, this is retail. Now, let's look. If I fall out away from here and I start a new distribution, this is called the distribution of volume. Let's look at what creates some of this behavior. When I break away in like this, the buyers were here in the microstructure and the sellers were here. This is an auction. This is the same thing in, you guys think time frames. Remember, I don't use time. Sellers are here. Well, we know sellers are there. Sellers are here. Buyers are here. Break low, microstructure. Now, this is a micro trigger, and it's not a get short here unless it's vetted. But let me show you something to think about. This stream is to help you think and maybe learn to understand market mechanics. So what do I know? Sellers are here, buyers are here. What happens if the buyers that are here and the sellers get below them. Doesn't that become resistance? What happens over here? If the buyers are there and I break below them, then what's my resistance? Now this is like a sidebar, like, hey, take a look at this. Where's my resistance? Isn't it there? And I break below the microstructure, the buyers here. Where's my resistance? Isn't it there and there? Because the resistance is there. There it is. Break low, microstructure. Where's my support? Break low, trigger. Where's my resistance? There. You see how this works? Take that concept and then move it into all time frames. So I'm just showing you micro here, and it's not necessarily specific locations for trades. This is just what I call sidebar for behavior and narration. So I read this and I'm going, oh, seller, okay, good. Where does my trade fail if I'm using this for, and this is only an idea, not a recommendation, I can use this for trade management and stay behind the microstructures. And I come down here. Right here is an area to observe. Now, I don't know, high, low, sideways, not my job, not interested, waste of time. Statistics, over 90%. So, what do? I don't know. Manage the trade. Change, right here. When I come across the liquidity, why? Because the buyers are here. Now, right here, when I get below here, if I get below here, this will become resistance. But if I don't get below there, look at the change. Buyers are here. Don't forget our iceberg. This becomes support. I'm going to draw a little box around it so we don't forget, because I forget everything. If I don't do this, I forget, because so I know the buyers are here. If we come down here again, I might get my buyers come back in, so I want to be aware. So now what happens? What do we know? Remember, opening swing high is up here. Let's label this thing. And what is at the opening swing high for this astute group of traders? What's at the opening swing high? Nobody knows, huh? Well, I'll help you out since we don't have time. Buy stops. Remember the plan for today. Early selling, right? Now we have the market short from yesterday. We have a gap. We have a 67% probability to fill the gap. Clueless, not important. And I have over 90% probability to go here. And I have the ETH high, 60 points or something above me. Probably not on the list. Could be, but I'm going to step out on the ledge here and say maybe not. So I have my shorts in here. And how does the market work? Market goes up to go down and goes down to go up. Buy stops are here. So right here is a warning Will Robinson moment and the counter rotation. Now I have to be extremely aware that these shorts who are late sellers might get squeezed. That's what I know. After that, I don't know anything. Let's watch. I'm still looking at shorts. What's this? What is this? Now, this is resistance. Now, there's another little piece, which I forgot to mention over here, which is very important. Overnight volume point of control. What is the overnight volume point of control? The retail price from the ETH. Now, remember, I don't know. Let's get over this. I need to know. I need to be right. I don't know anything. I know maybe. The best we have in trading is maybe. That's the randomness. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it. Who knows? Can you operate in a environment of maybe? Well, if you're in a 100% random environment 100% of the time, how can you get anything more than maybe? Maybe it'll do this, maybe it'll do that, maybe it won't do any of it. I don't know. Do you notice how I say I don't know? because it's the truth. I can't. But I do have some things I know. I know this is the retail price from the ETH. I know my current auction found too high over here. There's my absorption. And there's my location. You ever hear of this in real estate? Location, location, location. Not prediction, location. So in your trade plan, if you're in Trader Lab and you vet it and you organize it and know that it works with random outcomes, you'd already know not what'll happen, but where it might happen. Now, let's look a little further. I know I got support here. And what do I know about this? Right? Sellers are here. Buyers are here. Break high. Remember where the sellers were? We're here, right? And this, no clue. Break high. Sellers are here. Test right there. If I don't break under, then there's, as they say, trouble. And this is where we break above the sellers. We test the micro high volume, which is right there, right here. So break high, test, test, break high, test, test, north. Now, what do you do about this? Lose your breakfast? I understand. What I do is, and I'm not saying anybody should do this, this is not necessarily the best plan. It's just the way I kind of operate. And I'm past this thing about getting all of it. You know, how you say, oh, I gave 6 points back. And you have the sense of loss. That is your primal wiring in your psychology. You don't experience the gain, you experience the loss. This is all critical self, and it's a fallacy when it comes to the trading business. All those emotions you have, all the judgment in hindsight is from Hyde. Hyde's the lunatic under the hood, the one who's 100% right in hindsight. Brilliant. How does that relate to trading? It doesn't. Here's what I know. If depending where my trailing stop is, I could get taken out here, I can get taken out here. And how can I respond to this? My stop has to be already being trailed. Not like my stop's out here someplace, So, it can, subject to time frame. So each individual trader operates in their own time frame. My plan, again, was early shorts, come across squeeze, and then continuation, and wherever it is, it is. But what is this? This is resistance. There's my squeeze. There's my opening swing high, right? Part of the plan. Who knows? Watch. So right here, so this is the scenario. So I get my opening swing. I got my variable high volume node here, too high. Buy stops there. What do? Stops. Gee whiz. What's this? Variable high volume node. Stop pick. There they are. Break low. What is this? Where were the buyers? There. Where are the sellers? Who knows? Where are the buyers? Here, there, there, going to the moon. No clue. Break low. What is that? Too high? Buyers are there. Break low. Too high. Short, stop, helmet, take a stop, or whatever the heck it does, it does. Doesn't matter. Where's my resistance? There, there, there. And now this is called mean reversion. This is the primary trade traders should learn, in my opinion. Up to you. Where are we trying to go? If, this is the thing. If this yellow line, and let's remember what it is, the highest volume, shopping, where's too high? Yeah, good luck with that. But if I run out of buyers, who are the buyers? The stops. Do I get additional buying above here? Well, maybe. I don't know. So if I put my trade on, because I anticipate the squeeze and I get a trigger, I'm going to take a stop, or I'm going to come back here for mean reversion. That's the trade. Now, so I've got the mid, the VWAP at the time, and this. So subject to your plan, not my plan, you would scale ahead of the mid, or you go in here and you look to come out the bottom. That's all I can tell you. After that, it's take a number, get in line. It's like the deli counter. Where's my resistance? Right? There, break low. Remember, this is where we're trying to go. Resistance, test, there's your target. Depending on your plan, either there, these are additional shorts, these are additional shorts, these are structured trades. And what you're trying to do, remember, you got this. My buyers are here. Now, something you need to vet, and again, these aren't recommendations, I'm just giving you ideas, right? If I got buyers here, I'm going to do what? Subject to plan, be looking at this for a counter reaction and potentially a reversal to come back here, or, give you the or, I break below here, test it, maybe, and if it's now too high, there. Okay, that's the trade. I'm just telling you the way it laid out. And here's what would happen, right? You'd be risk neutral, and you're trying to come actually down to here, and you get taken out. Now we squeeze more, so the stops here get taken out. These are just trades. If you're looking for holy grail, wrong business. Now, full session VWAP. I have another trade, and this has to be vetted, and it is really a reversion trade. Remember, this is mean reversion. It's called outside in, which this is the mean. So the idea of reversion trading, and this is the same thing, by the way, outside in. Outside in. And then, sorry, Tom. Okay. Outside where? In. So, and you got to be, what's hard, of course, is I don't want to take a stop. Well, I've never wanted to take a stop, but I've gotten a little past what I want because of my emotions to what I need. And in trading, I need to sample the market. That's what I need. And I have a trade, and you have to vet this. Let's look at the structure. So what do I know? Well, I know I clipped these guys, and that was a good short. That's just a structured trade for me. I now get these guys. And remember, part of my plan is I can fill the gap, 67% probability, right? So let's look. Full session VWAP, liquidity. So I have alignment, I have buyers, I have my stops, and I have my icebergs and clueless. Right here, so there's the buyers. Who are they? Initiators or stops? To me, all we're doing is getting these guys out. And then if I put this on, I'm going to get stopped out, of course. Or what? Come back here, and I'm going for this. Nothing has changed. What has changed? Let's talk about that. Has anything changed? What am I trading as a day trader? Rotations. What is the trend? Down. What is the possibilities? Squeeze. What am I going to do with the squeezes? Sell them. All right. Why? Higher time frame, down. So this sets up a short for me. And this was, I think, one of our traders posted that. This is a structured trade, though. And where am I trying to go? Let's come back. If I get short and I cannot sell this, I'm sitting here, my jaw will be on the floor with yours. But this is what I see. Liquidity, iceberg. So I see my sellers, I see my absorption. Right here is a trigger. No, right here. And I have this. So this is my microstructure, break low. Where's my resistance? It's right here, because the buyers are there. Break low. Now, if you're very skilled, you could be selling it here, but let's assume we're all in the Barca Lounger. Trigger, stop, up here, and then you're trying to come across to here, to there. That's the trade. Let's see what it does. I don't remember any of this. I just put these things on, and whatever it does, it does. I don't know. Notice where we come back. You see? So if you take this, your goal is to come here. Now our emotions, when we see this, what do? What did I used to do? I'm getting out. I don't want to take a stop. Well, let me see. My stop's up here because that's where the trade fails. I now, because I'm short here, let's just say, and I get the sweep. And someone was asking me about sweeps this morning. This says potential counter rotation. There's a sweep. So that says this. Sweep here, by the way, says this. Sweep here, by the way, says, and I say it says, I'm saying it suggests. It doesn't say anything. It says, wake up. Okay. Pay attention. Sweep, counter rotation. When I see the sweep, and if I've been in the Trader Lab and I've been getting an education, I'm going to know certain things. Not that I can't predict, I can suspect. If I see the sweep and I know I got this, if I anticipate, and it can just keep going, remember that. If I anticipate the counter rotation, I'm right back here. And I'm going, all right. This is where the sellers took control. Let's look where the sellers, I'm just going to throw a little line on here for you. No clue, by the way, I always use the term no clue. And it's not just because it's the truth. It's because mentally, I'm speaking to myself that I can't predict. I do know what happened there. So when I come back to this volume in the microstructure and I see my seller, the sellers are here, there's the icebergs, the sellers are here, the liquidity is still here. If I sell this, there's my trigger. I can sell this, I can sell this. My stop goes in the same place. It's the same trade. How many of you bail out when you get the counter rotation? Guess what? Not good. Why do we do it? Come to Trader Lab. Shorts. And where are we trying to go? Over 90% probability. So for me, okay, watch. VPOC migration. Watch. Now, what do we know about this thing? This is too low. Uh-oh. Isn't that support? So I got support. Support. Why? On sale. On sale. Up. Retail price. Mean reversion. Back to here. Okay, primary trades here and then that. Now let's watch the behavior. Support. Watch. Now, support. What's this? I know. Mid VWAP. Support resistance. Support resistance. Now, subject to your skill in the way you slice and dice this thing, you could be selling this. You could be selling that. You could be selling that. See? Up to you. Again, doing this. Watch. And what about this? Let me show you. All these are trades, and now here's the important thing to understand. This is structure. They're not necessarily trades you should or could take. They are ways that you can narrate. Remember, language. So this, remember, support. So subject to, I'm always going to say subject to because this is your plan. If I'm short from here, I'm trading reversion. If it breaks under here, I can sell it there. If it breaks here, I can sell it against there. If it breaks under here, I need to be conscious. I can sell it there. I'm not saying these are initiative. When I'm saying you can sell it, I'm talking about structure. And now you know that you can use it for trade management, all of which you have to vet. What do I know about this? But what do I know about that? You see? So what do I know? Coming back to our context grid sheet, shorts only, out of range, out of value so far. And the ETH low, what's the probability? 72%. On its own. But what about the ETH high or low? 91% probability. Why wouldn't I trade to that? And take a profit. Is everybody with me? Yeah, Mark, you're welcome about the sweeps. Any questions? How you doing in YouTube? Don't fall asleep. So Let's look at change. Now, nobody knows, so this is like, if you're saying to yourself, I knew it was going to do this, not so good. By the way, if you know, DM me. We'll talk because I don't know. Um, I can't know, so I've removed the need to know and replace it with the need to follow my plan in a random environment. Remember, the casinos don't know. They just know to play the game, deal the cards, and sample the market to get that edge. Extract it. They don't know anything else. Unlike us, if they pay a gambler, they don't change the game. They don't skip the next hand. They don't do anything different. Anytime they change what is vetted and has an edge and they don't stick to it, they skew the odds towards the gambler and away from themselves. Ever thought of it? Interesting, isn't it? So, what's this? Buyers are here. Sellers get below the buyers. Going to zero. Next support. Who knows? Remember, 6,700 is an important level. Pointed it out at the top of the stream. This is important. Sweep. Now, right here, I get a sweep here. This is my resistance. And I get this sweep here. Now, this suggests lower, but this is my support, or resistance, and that's resistance. So I got resistance. Why? Because my buyers are here and I got under them. So I'm going to put a little box around this thing just so we don't forget. What you're seeing me do is not complicated. I have what's called anchored inputs. In other words, I'm doing the same thing in multiple time frames, as you think of them, but I don't know what's going to happen. Right here, why wouldn't the market go up? How about, I don't know, probabilities, I'm holding, right? And my target is here, right here. That's where I put my target, and that's all. That's all I'm interested in is this, because I only have so many contracts I trade, and whatever it is, it is. So I just take chunks. So right here, where's my resistance? Remember, right here, I want to break and hold. If I come across, then where's my next level? It's this. Why? The buyers are here and they failed. So using liquidity, right there. So let's see what it does. Breaks through. Notice right here how it reacted. So this is, this is where there's trouble. Either there and you're out, me out, but that's just, luck of the draw. It could have done this anywhere. So it's all the same. Now out. Now what? Let's come back to the concept. RTH open. We have sellers in here, which means buy stops. If I run out of sellers, I can squeeze them. So these sellers, they're the buyers. If I come out here, I can sell it because I got buyers in here. Now I get the buyers. Now I got shorts in here. Now I can do anything. But what happens if I run out of sellers and I get my buyers? I squeeze them. So I'm continually taking shorts. But, and here's the but, every time I get a down leg, I have built-in buyers. That's the shorts become the buyers. In YouTube, I'm getting a question, do I have recommendations for people to use Bookmap for order flow, but use a time-based platform to execute? That shouldn't have anything to do, really, with when you take a trade. I use time-based for my RTH in the higher time frame. That is time-based. Not weekly, not monthly. I don't use time, but I do reference RTH. ETH is not part of my higher time frame, but it is relevant for the last auction before the RTH opened. So I hope that makes some sense. If you have further questions about that, come to Trader Lab. Use the link in the bottom of YouTube. Remember, there's no cost for Trader Lab. So anyway, resistance, breakthrough. I'm out of here. Thanks for playing, Tom. You get a coupon to the buffet. Trade's over. Now what? Now I'm still looking for the squeezes, and I'm looking for short continuation trades. Let's look. Now, watch. Now remember, What do I know? This is too high, and this is now my VPOC, or my fair price. So, which was, I think, here. So basically, too high. This is resistance, this area, and this is resistance. If I break over resistance, my next level is going to be here, and I can come up, and there's stops, remember. And here's another little tidbit. Little tidbit, you ready for a tidbit? Tidbit. What is this? It's the VWAP in the mid. Okay. What else? Double top. What is here? Let's put our, as they say, our thinking caps on. Buy stops. Where does the market go? South. Where does it come back? Stops. What do retail traders do? Write this down. Think like a retail trader. Don't act like one. I know, and so do you, if you think about it, that there's going to be stops here. All these traders are like lemmings. No offense. We're all doing the same thing, except what I had to learn, I always ask myself, well, why is this happening to me? You know how you ever say to yourself, they went for my stop? I'm a victim? Have you ever thought it's your responsibility? Or is it somebody else's? Who's responsible for the outcome? Isn't it you in a random environment? So think like a retail trader. Just don't act like one. Their stops are here. When I look over here, what happens to the VWAP in the mid? Mechanical sellers, stops, they're in here now. So where's their stops? Here. Am I going to sell in front of this? No. How am I going to use it? Having been run over, I got track marks on my back that are indelible at this point. So I've learned through research and pain that I don't want to do what other traders do, because most of them don't have any sustainability. Over 90% fail. Well, why do they fail? Because they're all doing the same thing. And so are you, most likely. We all start out that way. What else are you going to do? Well, I come up here, I get the stops. There they are. I see my icebergs. I have my VPOC here, and when I break above it, I'm going there. When I break below it, and all I did was get these guys out, and I have resistance up here, break, test, absorption. This is a trigger. I can sell this, and then I'm trying to come back across the range, to here and back to there. And then maybe out the bottom, who knows? Just showing you, just saying. And to where? To here, and if I break below here, this, let me show you. And again, this is just structure, not trades. You need to learn to understand what's going on and then build the trades that align. Do you want to sell this? You see? Well, how about this? You could sell it here. You could sell it here. Do you want to sell this? No. Me? No. Why? My buyers are here. So if I'm going to get short anywhere, I'm looking at these levels because this was resistance, right? I have buyers here and I have sellers here. If I break through, this becomes support. So if any shorts I take, I'm looking at where the buyers, got control. They got control here and here. Okay. So I don't know about this until, see the resistance, the reaction. That's why this is resistance. And then it fails. All right. Well, what about when you come down? These guys might be here. Scale. Then what? Put your helmet on. And where does this fail? Back above here. And then and then you got this. You get below here. Let's look. Follow the yellow brick road. Remember 6,700. Remember that? Important. Watch. So I'm going to take you into what I'm showing you. I've made up these trades I made up for myself many years ago. And after a lot of, I think the term I want to use is brain damage, because, and it took years. Okay, what I've done here, and when I agreed, when Bookmap asked me if I would do, stream for traders to help them, I created the Trader Lab, so you don't have to go through what I did. It doesn't mean you'll ever be a successful trader because you have to learn something different, and when you're all doing the same thing, it's, I think, not realistic. By the way, what's this? Break low. 6,700 was our prime. This is a very important level. This right here. Okay, it's on the chart. Let me show you where it came from. Might as well show it to you. This out here is too low, and it's around 6,700. 66, 97, 75 to be exact, but 6,700 because of the liquidity. So if I come down, and this is yesterday, so let's look at it. This is my area of interest to get below, to potentially come out the bottom or not, or stay inside. Doesn't have to do anything. 60, it's 97.75, but liquidity's at 67. I want you to see that I already know about this. Now, remember what I know. I know it's a level. I know that it's a strike price. I know that there's liquidity. That's all I know. Do I need to know anything else? No, I don't. Do I know what it's going to do? No, I don't. 97.75. There it is. Get under here, break low, target. No clue. By the way, you could be done with this thing right here. No problem. Break low, resistance. Watch. Break high. What happens to resistance for this astute group of traders? If I can't get below here, what happens? Squeeze, right? You guys with me? How we doing? Watch. So we know up here we had our sellers. Okay, here, this. So let's move this around a little bit. So I have resistance here. And it's the first hour's high. And remember, can get run over and stopped out anytime, anywhere, and that's okay. Got to be okay. What are you going to do? So I know full session VWAP was here, and I know maybe I got too high. My resistance is there. So I know if I come up here, I can look at it, and it's a location. It's not anything more. Also, I know what was here. Break low, test. So I have this, and that. I got these areas. So now when I come up, I got to look at order flow and resting liquidity. That's all I got. I don't know anything else. And I never know. By the way, I don't know. But let me show you. So I have liquidity coming in the book. Now, when liquidity shows up, I have no clue. Let me show you. So I know about this, and I see this, and I got this. So I have my liquidity. Now, again, no clue. So when it comes up here, this is resistance. It breaks low. This is a trigger. If I sell it here, I'm trying to go there and there, okay? There, and continuation down. So what do I do with this? If I use this, and I've been talking about this recently, about some of the things I do, and I'm not saying there aren't much better ways to do things. I really couldn't tell you. I'm just sharing a process I developed for myself, and it, does its thing, and whatever happens, right? Here's what I know. I know if I come up, of course, I can get stopped out. That's a given. So don't worry about that. We can't. I know that the sellers are here. I break low. This is where the buyers were. I can sell this, and I'm trying to go there, and I got to be conscious of this too. But I'm kind of bearish, so my call, this is where I'm going. So I can scale. Let me show you. If I sell this, I can scale there, or I can scale here. This, when the trade is put on here, this yellow line, which is the high volume, is there. So my order is going to be there. When this shifts up, this is the warning Will Robinson moment, because what that is this is a new retail price. This might be too low, and that's why you see this. Now you have choices. When you see this, you could get out because maybe that's too low and this is a new price. And but notice how it was over here. This was a short. Now I come back from this side. See, I get above it. Now it becomes, just look, support. See, if it's support, then where's resistance? It's up here. If I find this seller, and this is a trigger, actually it's there, but you can go slower. There, trigger, sell to where? To there, and then where are you trying to go? Across the range. To where? Trade management. I don't know. You? I don't know. See? These are all shorts. Now, if it's not your trade, you're just sitting in your Barca lounger. You don't have to be doing any of this. Why would you? Unless you have an edge. Now, what do I know? Let's look at what I know. Where were my buyers? Here. Watch. You see them here. Watch. This buyer here. And we broke below them. So the buyers are there. We come above here. So this is too low. What happens with these guys? Resistance, break low, break high, too low. Now what? I'm going to extend this out, just showing you process. Not saying it's any good. I'm always going to say that because I don't know. I can't speak for you. I can tell you what I do, and I'm not saying it's the best thing that, it's just trading, it's not, there's nothing more to this. It's like, I don't know, it's random, right? So what do I know here? Let's look. Buyers are here. Buyers failed here. Resistance. Resistance, breakthrough. Now what? Breakdown. What's this? Resistance. If I got here, I could sell it. Doesn't get there, say V. What's this? Buyers are here. Break under it. What's over here? Buyers and my 6,700 key target. What happens here? I get my buyers. What happens here? This is resistance, isn't it? There's my resistance. There's my liquidity. Breakthrough. Off the shorts, jaw on the floor, looking for continuation. Wherever you take it, you take it. Now, let's come back over here. Where's my buyers? See them? So, if I get short, I got to get risk neutral. Where am I trying to go? See them? I'm going here to get risk neutral. Then, if I break here, my next level is what? This. Where'd this come from? See it? Order flow. Now, you got to learn this. It isn't just draw lines on a chart. You need to understand what's going on. Notice support. Break high. Break high. Now, this is the mid. You want to sell the mid? That's your business. Me, no comment. I don't trade the mid. Trigger. Support. Support. I don't know where we are. And what happens to support? Doesn't it become resistance? And where'd that come from? Right there. Short. What's this? Break. Where's my level? Watch. Not saying, again, and there's no precision in this, guys. I sit here and my jaw's on the floor, and it's only locations of behavior, not prediction. So I can sell this, and I got a scale here to get risk neutral. Then I'm just going down the financial food chain. I have no idea. This is resistance. This is resistance. Subject to the time frame I trade, which is not your time frame, right? Just me. resistance, support, break, resistance, my stop will go there. Now, some of you guys are going to go, wow, I want to sell this and use a micrometer. Up to you. You got to vet it. You might find that having a larger stop keeps you, notice the short, keeps you in the trade. So this is a short, and where's our target? It was there. So this is 67, right? Oh. Wait a minute, lost my place. 67 is a target, break below. Now, if you got taken out here, you got another entry here, and you're just coming down. Because look what happened here, you see. So if I find my buyers here, and I got this here, if I take this trade, or over here, I've got to gut, my buyers are here. So I've got to scale before, because I know my buyers are here. That's what gave me this. And if that's not your thing, it's not your thing. Or you're keeping your stop way out here and you're going to give this MFE back. And if you're okay with that, that's good. Me, I get disturbed. Where are we here? Wow. Yeah, this is nice. Full session VWAP. Now let's come back. What do I know? Let's come back to what we know. Not what will happen. Remember, we don't know what's going to go on. So full session VWAP, short, okay. Squeeze, look at this thing. I don't know if that's news or somebody tripped over a cord at the CME. Not my job. Liquidity is here. Break low. And what is this? Losing my brain here. I got too many colors on here. This is the fair price. But what happens if it's still too high? What do you think? I'm not paying that. Sellers, trigger, teeth chatter. Watch. I have alignment. Now, what do I have? Full session VWAP, clueless, right? Okay. Watch. Now, I don't know. I know that's the retail price, and I know we're really shoppers. You're a shopper when you go to the store. You know that? You're exchanging dollars. It's an exchange for a product. And if it's priced too high, you're going to leave the store and go shop at a more fair price. Currently, this is the fair price. But what happens if it's unfair now? The highest volume. And we come back, right here's the trigger, or there, but let's be slower about it. There. Where was my buyers? There. And here. Break low. There's a short. This is a short. And the high volume, or microstructure, you can see it to the right, that little node sticking out, is the retail price. This is called mean reversion. I'm reverting to the mean in this structure, and in a higher time frame. Up here is also a mean. So it's always reverting. So it comes to the mean. In a shorter time frame, it breaks and it comes back to the mean. And then it's, I'm not paying that. We're out of here. And off you go to wherever. And that's just a trade. Whatever it does, it does. Let's see what it does. Let's look. So I had buyers here, and this is my liquidity. See where it is? Support, 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 break low. Now, again, up to you. Let's just say you could use this. I'm not going to go much more into it. Up to you. Where's my resistance?
1 minute till news event.
I'm running out of time, guys. I'm out of time, but I think you can see what's happening here. Please give a like if you're visiting in YouTube. I apologize for trying to be, speeding along, but, I'm trying to cover as much as I can. My objective here is to show you that there's order in randomness. And if you vet a trade plan, wait for your trades that have a statistical edge, accept the randomness and that you're going to take stops, which are not right, wrong, but cost of production and overhead, then you might be able to build a sustainable business. Please give the like. Thanks for visiting. today in the Trader Lab. If you're interested, use the link in the bottom of YouTube. Visit Trader Lab. There's 60 PDFs of these structured trades that you can look at, reverse engineer. There is no plug and play. Trader Lab community is open to all of you. There's no cost for it. And I'd look forward to meeting you there if you're interested in building out and maybe creating sustainability for yourself in the business of trading. Thanks again, guys. Don't forget to give the like. Thanks for visiting Trader Lab, and come on over to Trader Lab. I'd like to meet you there, and so would the Trader Lab community. Appreciate your time and interest, and also Trader Lab participants, thanks for all your support. Trader Lab is about the business of trading, building sustainability, data mining, mutual support, leveraging the collective experience of the community. It's not about how long you've been trading or what you do. What it's about is if you keep waking up with Trader Groundhog Day, work hard, random winners, but losing, then it means you don't have an edge. That's not sustainable. So it's up to you. Maybe this will help you. Can't say it will, but it's helped a lot of other traders. Why might it not help you? Thanks again, guys. Don't forget to like. Look forward to seeing you tomorrow.